Bloomberg Audio Studios. Podcasts, radio, news.
Finance ministers and central bank governors from the G20 countries met in South Africa this week. But despite the U.S. Treasury Secretary Scott Bessent again skipping the summit, U.S. tariffs are still driving the agenda.
You know, we've taken in hundreds of billions of dollars in tariffs, hundreds of billions, and we haven't even started yet. And it's going to be a great thing for our country. I think it's going to be a fair thing for the world. And we really haven't had too many complaints.
While South Africa wanted to focus on debt relief, climate, and reform of global institutions, attention is instead firmly focused on the fallout of a global trade war.
We are, of course, meeting at a moment of ongoing uncertainty in the global economy, uneven growth trajectories, elevated debt levels, persistent inflationary pressures, and the complex implications of tightening financial conditions. The multilateral system is being tested, and our collective ability to respond will shape the pace of our recovery.
On today's episode of the Next Africa podcast, we'll look at why there's only one topic dominating the agenda, and whether, as the U.S. continues to ignore the G20, President Cyril Ramaphosa has any chance to make an impact with this year's presidency. I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. I'm in Zimbali, on the Indian Ocean coast of South Africa, for what was hoped to be one of the flagship events for South Africa's presidency of the G20. President Ramaphosa had hoped he could be the voice of the Global South and push for agreement on issues such as debt relief and also climate finance. But instead, all of the talk this year has been about global trade and the impact of President Trump's tariff policy. In a moment, we're going to be speaking to Bloomberg's Africa economist Yvonne Mhango. But first, let's hear from some of the key figures on the fringes of the G20. I spoke with Lesetja Kganyago, the central bank governor of South Africa. How much do you think tariffs and tariff threats really are sort of clouding any of these priorities that South Africa actually set out for in this G20 presidency?
Well, the tariffs, remember, get imposed on the economy that is pronouncing that it would like to have tariffs. It is a cost on the consumers of that country in terms of pricing and the lot. But for all of us who are exporting to the country that imposes tariffs, there is an impact on output. And in the case of South Africa, the biggest impact has come through the automotive industry and the agricultural sector. The issue about tariffs also raises important issues. We're having to grapple with what would this mean for the outlook of the U.S. economy and the posture that the Fed might take in terms of monetary policy and what it would mean to global financing conditions. And the problem is that there are so many moving parts, it is not clear where we would end up. Uncertainty abound, and everywhere we talk about we're uncertain about this, we are uncertain about that. And many central banks have resorted to just presenting a forecast and also have to do a scenario because we do not know how these things will pan out.
Does the absence of Scott Bessent and your counterpart in the U.S., does that then set back the progress of...
My counterpart was here in February. My counterpart was in Washington.
Yes.
And he did indicate right at the beginning of the year that he will do the February meeting and he will do the April meeting, but that he will not do this meeting. He will be, the Fed will be represented by a vice chairman. And at the U.S. flag, both the Treasury side and the Fed side, there will be people there representing the U.S. What matters is there somebody behind the flag who is able to articulate the position of a country. That is important.
Okay, so the absence of Scott Bessent then is not necessarily a snub. You don't see it as a snub for us.
It is not an absence of the U.S.
I see. I want to ask, too, about monetary policy, because we have seen inflation here in South Africa, at least at or near or below the target for the central bank for about 8 consecutive months, I believe it's been. And yet you still say the outlook is clouded, I think was was the term that you used.
Yes, the outlook is clouded.
Are you confident, though, that inflation is moderating and moderating lower, as the forecast did suggest over the past few months?
We are confident that it has moderated, and we actually, our baseline is that we think that it will remain throughout our forecast over the next 24 months, that it will remain within target. But we do caution that the outlook is clouded. There is uncertainty out there in the global space in the main. And almost every international conference I had attended about by the central banks over the past 3 months keeps on hammering on the issue of uncertainties, monetary policy in uncertain times, financial stability implications of the uncertain environment. Uncertainty is the word that is permanent.
Stick with me. When we come back, we'll hear from Yvonne Mhango about what's at stake in this global trade war. We'll be right back. Welcome back. Today on the podcast, we're discussing the G20 Finance Leaders Summit in South Africa that was this week, as the world continues to focus on growing trade tensions. Bloomberg's Africa economist Yvonne Mhango is joining me now. Yvonne, we spoke with you earlier in the year when the original tariffs were introduced. Of course, there has been quite a number of changes that have happened since then. Talk to us about the impact of some of those changes over the past few months on sub-Saharan Africa.
So the last time we spoke, the tariffs, the reciprocal tariffs, had just been imposed by the Trump administration. Since then, there was that 90-day pause that they announced in about mid-April, and that expired last week. Essentially, what was meant to happen during this 90-day pause is the U.S.'s trade partners were supposed to approach the U.S. and negotiate lower tariffs by offering some sort of concessions. We saw President Ramphosa of South Africa lead a delegation to the United States. And that, part of the reason for that visit was to try and reach a favorable agreement when it comes to trade. As you're well aware, several African countries are part of what was known as the Africa Growth Opportunity Act, basically that offered duty-free access for several African countries into the United States. So you can imagine coming from that duty-free access to a high levy has significant implications. The country hardest hit, we touched upon this last time we spoke, is Lesotho, which was slapped with a 50% tariff. Even within the 90-day pause period, which gave the country an opportunity to negotiate, we've already seen factories close down. These factories were producing garments that they exported to the United States, and we've already seen jobs lost as a result. In terms of South Africa, the most industrialized country on the continent, what we heard about 10 days ago from the United States is that the 30% reciprocal tariff would be reinstated on the 1st of August. It did suggest that there was scope in the 3 weeks until that date for the country to still have talks with the United States, but we haven't heard anything as yet. And I think several countries are preparing themselves to have the original high levies imposed.
Would you say South Africa is the hardest hit in sub-Saharan Africa? I mean, we talked about a few of the other smaller economies that are being maybe unjustly targeted is what I'd call it. But would you say South Africa is maybe going to take the hardest brunt?
The short answer to that is no. I think a small open economy like Lesotho will be harder hit. And the main reason is because their exports to the United States accounts for 10% of GDP. That's quite a big hit. We've modeled the impact on South Africa's economy. So yes, the US is an important trade partner. 10% of the country's exports end up in the United States, a quarter of which used to enjoy duty-free access. That's your like of your citrus products from the agriculture industry, as well as the automotive industry. However, when we look at the actual impact on GDP, it's less than a 1% hit. To be exact, it's 0.3% of GDP that's at risk as a result of these tariffs. So the impact, particularly if we compare to the Asian economies, is relatively small for Africa in general. But of course, for the smaller economies, such as Lesotho, they're going to see a much more significant repercussions as a result of this trade policy.
And Yvonne, At the G20 summit, as we've talked about, South Africa was really hoping this would be a year where they can focus on a lot of the Global South priorities. It has really become a year that has been focused on these tariffs and thwarting what many people see as a bigger and broader trade war. Is there anything that maybe central bank governors, finance ministers can do? Are there any policies in place or discussions that maybe you're hearing to support or to offset some of the policies of the tariffs and from the Trump administration?
So, yes, you're right. In terms of the original objectives that South Africa had as the leading the presidency of the G20 this year, a lot of those ideas, such as addressing climate change, putting debt, the issue of the developing world's high indebtedness as a core issue to be addressed, particularly by our developed world partners. Those issues now have been sidelined, which is unfortunate. And as you're right, many people are just reacting to the tariffs and how they can respond to that. In terms of how policymakers can react, I guess on the monetary policy side, central banks, if they have the room to do so, can put in place accommodative policy, because as you can imagine, the hits that tariffs, the impact of tariffs would be a slowdown in growth generally, and that's globally. So it's a slower demand for our commodities and our exports, not just from the United States, but from the rest of the world, which is also being hurt by these levies. So in countries where inflation is benign, and in South Africa, we're fortunate enough to say that that is the case at this point in time, that means that central banks can look at easing monetary policy to create a more accommodative environment that will support growth and consumption in their particular economies. On the fiscal side, what can finance ministers do? Unfortunately, the room for expansionary policy is very limited because it's been 5 years since the pandemic. And then 2 years after the pandemic, we experienced the impact of commodity prices, particularly on the grain side, spike. And that led to inflation and high inflation globally, but that also impacted several African countries on the fiscal side. So what you're faced with is countries that are actually trying to reduce their budget deficits and to restore their debt positions to more sustainable levels. That's why debt was meant to be such an important issue at these G20 meetings. So the point I'm trying to make is there's very limited scope for finance ministers to put in place expansionary policies that would stimulate growth.
And we heard from Lesetja Kganyago actually saying that it's difficult to say, is what he said, if risks are actually materializing. Based on the data, would you agree with that?
Well, yes, I think his term was, he spoke something about how it's a nightmare to forecast anything. And it's absolutely right. I mean, as a central bank governor, when they're providing their rate decisions, which the South African Reserve Bank will do later this month, they're forward-looking. They're looking at the trajectory of inflation. And in this environment, it's highly uncertain. As you know, policies are announced on such a high-frequency basis, and there's no guarantee that those policies that are being announced will be sustained. So yes, it is quite challenging in which environment in which to make policy. But that said, what we are seeing, which is quite interesting, is that for now, at least outside of the United States, and in some emerging markets, we are seeing some softening of inflation. And that's, we think, is as a consequence of the currencies doing well in emerging markets under a weak dollar. So, of course, if your currency is strengthening against a weak dollar, what it means is that it reduces your imported inflation. So we are seeing currencies soften on the back of that. It's also helping soften energy prices, which we've seen in South Africa. So inflation is actually cooler than many anticipated in many of our emerging markets, allowing for accommodative policies. So these are some of the trends we are currently seeing, which could help, particularly in terms of trying to lift growth.
Yvonne Mhango, thank you as always for joining us and for your insights. And you can read all of our coverage on the G20 on Bloomberg platforms now, including the Next Africa newsletter. We'll put a link to that in the show notes. This program was produced by Adrian Bradley and Tiwa Adebayo. Don't forget to follow and review this show wherever you usually get your podcasts. I'm Jennifer Zabasajja. Thanks as always for listening.